Chapter 13, Objective 2, Calculate Employer's Payroll Taxes. And then we're going to actually journalize the payroll tax entry. So in Objective 1, you actually journalize the payroll entry. So let's say for this business we only have one employee, and her name's Mary, and she made $300, had these deductions, and her net pay came to $232.55. So if we had just that one employee, this is how you would have journalized it in Objective 1. Debit your salaries expense, credit your payables, credit your cash in bank. In addition to paying Mary, the employer has 4 payroll taxes. The employer has to match actually the Social Security, match the Medicare tax. So if Mary had $18.60 taken out of her paycheck for Social Security, the employer has to match that and take out $18.60 as well. So the employer pays 6.2% of gross in addition to what Mary had taken out of her paycheck. The employer will also match the Medicare 4.35. So the employer has to pay 1.45% of gross in addition to what Mary had taken out. And then the employer has to pay federal and state unemployment. Federal and state unemployment. Federal, you take gross earnings times 0.8%, which becomes 0.008. So if I take earnings, multiply that by 0.008, the employer has to pay $240 on Mary's payroll. And then state unemployment wants their money as well. So you'll take gross earnings times 0.054, so equals 300 times 0.054. So those are the 4 payroll taxes that the employer has to pay. If you add those up, total payroll tax expense comes to $41.55. So for them to employ Mary, it costs them the $300 to pay her salary, plus $41.55 for the taxes they had to pay on Mary's salary. Now how do you journalize that? I actually want to put these in different colors. So this is going to be your payroll tax expense. So I've just used April for the date. This will be payroll tax expense came to $41.55, and then you're going to credit your payables. So we've got Social Security tax payable, Medicare. Here's where you have to be careful. This is federal unemployment tax payable, and then we have state unemployment tax payable. 1860. And my debit should equal my credit. Looks like I need one more line in here. One more line. Indent. And this was payroll register 421. This is called your payroll tax entry. So let's just do this. And we'll shade it for you. Okay, and that's your payroll tax entry. So there are 4 employer payroll taxes: Social Security, Medicare, federal unemployment, and state unemployment. Those are the 4 that the employer has to pay. We already kind of talked about these. Social Security is at 6.2%. Medicare is at 1.45%. Federal unemployment is at 0.8%. And we're going to use, for this one, we're going to use the 5.4%, but actually it varies. It depends on your business. It depends on how many employees are unemployed. So that number is going to vary by business, but let's just use the 5.4%. The earnings, a limit. So we talked about this before. Once your earnings, your gross wages, your accumulated earnings, reaches $127,200, that's for 2017, you no longer have to pay that Social Security. There is no limit. There is no limit for Medicare. For federal unemployment, the limit is $7,000. So in our other example, once Mary has made $7,000, you no longer have to take out that 0.8%. State unemployment, once Mary reached $14,000 in wages, you would no longer have to take out that 5.4%. Okay, so just kind of just so you know that there are limits, and once you've reached it, you no longer have to take out that tax.